Everybody, this is Gary Dean with Sentiment Timing, and this is our technical video report for Tuesday, November 1st, 2022. I'm showing you the fractal pattern that I've been pointing out here, where we had to move up, we had a dip, and then back up again, and then from there we saw the market crater. I'm not expecting this to take place, but I would not be surprised to see a test, anywhere between let's just say 30. This is going to be important support right here, right at the 3,800. If the bulls lose that, then we're probably coming down to the 3,750. This is where I would be a little bit interested in buying, and even though I'm expecting a pullback. I'm not really comfortable shorting. We may end up coming straight down, but it's one of the things where time wise, we're kind of in a bullish stage right now. So to me, I'd rather let the just let the market go to where it's going to go, and then look to buy the dip. I think that's going to be the path to least resistance. Now, tomorrow's the Fed decision. We pretty much know they're going to raise it 75 basis points. There's nothing really that's going to be surprised on that. What the street is actually kind of bullish, not bullish, but the reason why we gapped open and stuff is they'll press the bears into thinking that they have inside information as far as having like what Powell says afterwards, and that's the thing is when you're if you've been short from up here and stuff and you came down, once we're at this level here, I mean people they're not really comfortable on the short side again because I mean tomorrow if the Fed says something that the bulls like, I mean heck we could end up somewhere up into the 39.60 in a very, very quick manner. But right now, this is the pattern that I'm following. So if that's the case, really what the bears need to do is get it through the 200-day moving average here. If they do, that's where I believe that we come down somewhere into the 37.50, not even the 36.50. This would be my support zone that I'd be looking to add to the position. So 60-minute chart, you can see we had defined bearish divergences. Here's that channel that I'm following. So we're right kind of at the bottom of it right now. And again, if they lose it, then we have moving average support that's at the 37.85. But it would make more sense for them to come down and backtrack a little bit more, give it a little bit more of a breather, and then from there, start some kind of Santa rally that will take us into the end of the year. So again, time wise, we're looking higher, but we don't chase when we see these big moves like this. What we do, we use this strength to scale out of positions. You could be holding on with the stop underneath a 3,800, or you could take it all and then just look to buy the dips and layer in on the way down. And again, I'd be looking around that 3,800, and then I would go to the 37, just say maybe even 37.30, and then down at the 36.50. So you layer in here. By that time, we should be pretty oversold right there. Hopefully, we'll get some bullish divergences and make another easy trade to the upside. So really, the thing is this: if the bulls can somehow get above these levels here at the 37, whatever the high was, 37.11, then we're most likely heading up to the 39.60 level. If the bears can push it through this 38.07 level, then we're going to have a move down to the 37.50. So let's see what plays out tomorrow. Today's really just a guessing game because we have no idea how the algorithms are going to be programmed to read what Powell is saying and making movements in one quadruple million seconds before everybody else, and they make money. But in any case, the to me, I watching these days, I very rarely trade ahead of Fed days because it's potluck. It really is. I mean, everybody knows what they're going to do, but it's what they're going to say. And then on top of that, with the bulls, and one of the reasons why I do think that we could kind of grind lower here into next Tuesday because we have the elections, and that's a whole nother just risk factor. So if we came down and say back tested this breakout line right here, we're coming down to the somewhere around that 3700. Depending on when we get there, we could be at 3650. But again, that's a bullish case, and that's a bullish pattern because we had the 5 waves up. Now we did some retracing, and now they're heading for the next one up. And like I said, don't rule out 4100. I do believe that we could get there by year's end. And with that, enjoy the rest of your night, and I will talk to you guys in the morning.